Everyone, thank you all for joining us today for our How to Manage Vendor Risk at Your Credit Union with Due Diligence webinar. My name is Jessie Redmond and I will be your host. On your screen, you should see multiple widgets that you can use, including Ask Question, Media Player, Slides, Related Content, Speaker Bio, Request Demo, and Help. If you are unfamiliar with our webinars, all the widget boxes are resizable and movable, so feel free to move them around to maximize your screen space. At the bottom of your screen in the toolbar are icon buttons you can use to show and hide the widgets. You can expand your slide area or maximize it to full screen by clicking on the arrows in the top right corner of the widget. If you experience any issues or have technical questions, you can use the Help widget or submit them along with any other questions through the Ask Question widget. Don't worry, we do capture all questions throughout each session. We will be answering some during the webcast, but those that we do not have a chance to answer live, we will address with you via email. Today's live session is eligible for 1 CPE credit. If you wish to receive this credit, please remember to answer all of the polling questions that will appear on your screen during today's presentation. You will also be sent a follow-up survey link 24 hours after the live session that will need to be completed in order to receive the CPE credit. With us today, we have Christine Kitamura, VendMinder's Senior Content Manager of Education. She will discuss a high-level due diligence overview, explaining how to manage and mitigate vendor risk with due diligence, where it fits within the third-party risk management lifecycle, and more. You will see a link to a copy of today's slide deck, a link to our website, a link to our samples library, links to our How to Do Vendor Due Diligence Reviews, the Complete Breakdown ebook, our Ways to Improve Vendor Document Collection Efficiency infographic, and our 7 steps of risk-based vendor due diligence infographic and matrix, as well as a link to our library of additional resources, all within the Related Content widget. With all that being said, I would like to hand it over to Christine. Christine, the floor is yours.
Thanks, Jessie, and welcome everyone to today's webinar on managing vendor risk with due diligence. If you have any experience with the due diligence process, you can probably agree that it's usually very time-consuming and a little confusing to know what type of vendor information you need to collect and review. I hope that today's session will help you understand this process a little better and why it's an important activity for your credit union. For today's agenda, I'll be discussing where due diligence takes place within the third-party risk management lifecycle and how it serves a different purpose during the onboarding and ongoing stages. I'm also going to review some specific reasons why this practice is important for both your credit union and its members. You'll also learn about risk-based due diligence, which is a helpful strategy that will save you a lot of time and effort as you collect those vendor documents. I'll briefly go over some of those first steps you'll need to take once you start collecting vendor information, and I'll wrap up our session with a few tips on how to overcome due diligence challenges, like working with a vendor that isn't willing to provide certain documents. Let's begin by taking a quick look at the 3 stages of the third-party risk management lifecycle. As you can see, due diligence takes place in the first 2 stages, onboarding and ongoing. This means that both your potential and existing vendors have to go through this process. Now, if you're newer to third-party risk management, it probably seems like a lot of unnecessary work to perform due diligence under existing vendors. Maybe you've been working with some of your vendors for years and are happy with them, though you don't really see the purpose of taking the time to collect and review all this information. But keep in mind that a vendor's risk and their controls can change even after you sign the contract. For example, there's always the possibility of a regulatory update that affects your vendor's product or service. Periodic or ongoing due diligence would help keep you informed of whether your vendor is complying with this update. So let's look a little further into initial and ongoing due diligence. There's a few different ways you can think about these 2 categories. On one side, you have initial due diligence, which applies to your potential vendors and must be done before you sign the contract. This is basically a way for you to evaluate any new engagements and make sure that they're the right choice before you make a commitment. The first round of due diligence helps your credit union identify and understand the vendor's risk and any controls that are in place. It's also a good way to take an overall view of the vendor to confirm whether it's really going to help you achieve your strategic and financial goals. And on the other side, you have ongoing due diligence, which applies to existing vendors and should be done periodically after you sign the contract. This process can identify any issues that need to be remediated and helps make sure that the vendor's controls are still in place and working effectively. Ongoing due diligence also helps reevaluate the relationship to determine whether the vendor is still a good fit for your credit union. Maybe your credit union has grown significantly over the past several years, and you're not sure if your current vendor can help meet some of your goals. The due diligence process provides an opportunity to either validate that relationship or give you reasoning why you need to start looking for a new vendor. In this next section, I'll explain some of the reasons why due diligence is an important practice for both your credit union and its members. First of all, it's expected by regulators. Listed here are 3 regulations from the NCUA that mention due diligence. And even though they're all over 10 years old, it's still a good idea to get familiar with these regulations since they're currently being used by the agency. The NCUA's supervisory letter on evaluating third-party relationships has several mentions of due diligence and includes different things that credit unions should consider during this process. Things like doing a background check with references, reviewing the vendor's financial condition, and understanding the third party's processes and business model. A separate letter from the NCUA covers due diligence reviews in a little more detail and lists a few minimum procedures that a credit union should follow, such as monitoring the performance of the program, reporting noncompliance to senior officials, and working with a legal team to review vendor contracts. The questionnaire is also a good resource to look at because it gives you a better idea of how examiners will evaluate your third-party relationships. I've also listed a couple of resources that reference due diligence from the FFIEC and CFPB, which will apply to certain credit unions. And even though the recent interagency guidance covers banking organizations, it's worth mentioning here because it offers some relevant best practices that could potentially influence future guidance from the NCUA. It never hurts to be prepared and just stay aware of what other regulators are expecting. Aside from those regulatory expectations, vendor due diligence is simply a good business practice. When you decide to outsource a product or service, you always want to make sure that you're choosing a vendor who will continue to provide value to your credit union and its members. If you go through the vendor selection process without first performing due diligence, there's a chance that you could partner with a vendor that provides poor quality products or services. They might initially seem like a good fit after a quick review of their website, but you could soon realize that they can't meet your standards until after you've already signed the contract. Due diligence can also help protect your limited resources. If you think about vendors that you've had problems with in the past, you might have had to spend additional time or money to deal with them, especially if you decided to end the contract and find a replacement. Initial due diligence can help reduce the likelihood that you'll have to spend these additional resources later on in the vendor relationship. Ongoing due diligence is especially important in helping to identify and remediate vendor issues early on before they become larger problems that can't be resolved. In some situations, the information you review might even result in the decision to end the vendor relationship so you can protect your credit union from financial loss or even legal consequences. This next reason is sort of an extension of the previous one because information security and reputation management should also be a part of any good business strategy. Most of us have probably heard at least one story about a credit union that suffered a data breach. Sometimes those breaches are caused by a security issue with a third party, but it's usually the credit union that takes the blame because they're the ones making statements to its members and the media. If your credit union were to suffer a third-party data breach, your members probably aren't going to blame the vendor, they're going to blame you. Even if this vendor is providing products or services directly to your members on your behalf, your credit union is the one that will need to provide answers about the breach. In addition to this reputational harm, you could also be facing other consequences like regulatory fines, legal fees, and maybe even paying for credit monitoring services for your members who were impacted. Although third-party data breaches aren't 100% avoidable, vendor due diligence can reduce the likelihood and severity. When you regularly identify and confirm that a vendor has effective controls in place, you'll have more confidence in knowing that your members' data is protected. Overall, vendor due diligence is going to keep your members satisfied by enabling you to continue serving them with best products and services. As a credit union, you're likely very familiar with what your members need and want through your services. And like most other organizations, you'll need to partner with a variety of vendors who can supplement your existing resources and support your overall goals. Due diligence can help ensure that your vendor relationships are continuing to provide value for your members, which keeps them happy with your credit union. And lastly, the due diligence process can even help your credit union stay competitive by maintaining your good reputation. It shows any prospective members that you're committed to partnering with trustworthy and high-quality vendors. You're not just choosing the cheapest or most convenient option that might only work short-term, but you're really looking to provide long-lasting quality and security for your members. Any member will, of course, want to know that you're keeping their data safe, even when it's being handled or stored by your vendors. So now that we've covered some of those reasons, that brings us to our first poll question.
And this brings us to the first poll question of the day. You should see the poll question now in the slides area. If you have any issues, please feel free to send us a message using the Ask Question widget, and we will be happy to assist. As a reminder, if you wish to receive the CPE credit for today's session, you must answer all poll questions and be in attendance for the entire live session. This poll question is, what is the main reason why you perform due diligence? It's a regulatory requirement, vendor selection, protection from cybersecurity incidents, or you're not sure. Christine, we have some time now to answer one of the questions that has come in from the audience. And that question is, what's the best way to start the due diligence process on vendors that we've had for several years?
So this is a great question because a lot of people tend to worry about how their existing vendors are going to respond to these due diligence requests. Some vendors might even push back a little because they're thinking, well, we've been working together for years and never had any problems, so why do we need to do this now? I would begin by just stating that your credit union has implemented a due diligence process for every vendor in your inventory. This can help emphasize that you're not really singling out anyone, and this is just a requirement for all of your vendors. You can also point out that it's a regulatory requirement from the NCUA. And if your vendors are still reluctant to provide certain information, you might need to state that you won't be able to renew the contract or you'll have to terminate early. So just a couple of suggestions. Hope that helps.
Thanks, everyone, for answering that poll question. Here are those results. By the way, you may have noticed reactions such as a thumbs up or heart coming across the screen. If you find this feature distracting, you can turn it off by clicking the 4 arrows in the top right-hand corner of the Slides widget, which will expand the slides to full screen and no longer show the reactions. Also, before we move on, in the Related Content widget, you'll find a helpful resource to reference, Our Ways to Improve Vendor Document Collection Efficiencies infographic. This resource walks you through 3 ways to ensure your document collection process runs smoothly. With that, Christine, back to you.
As we move on from some of that background information of why you should perform due diligence, I'd like to start focusing more on the actual process. So before you even begin collecting and reviewing all this vendor information, it's really important to understand the concept of risk-based due diligence. This basically means that the vendor's risk and criticality will determine how often you perform due diligence and what types of information you should be collecting. When due diligence is based on risk, the entire process is a lot more efficient because it simplifies document requests and helps you understand which vendors need more of your attention. Even though all vendors need to go through the due diligence process, you'll want to make sure that you're not spending excessive time and resources on some of your vendors that don't expose you to a lot of risk. Creating a more efficient and simplified process is really beneficial for those of you that may have smaller vendor risk management teams or who don't have a lot of experience in this area. Your program can still be validated to examiners when you show evidence that you're taking a risk-based approach and focusing your efforts on your critical and high-risk vendors. So in order to use this strategy, you need to understand two key aspects about your vendor. It's criticality and inherent risk. And both of these will factor into the due diligence process. First off, criticality refers to the impact that the vendor will have on your credit union or its members if it were to fail to provide its products or services. Now, some people might assume that critical is negative in some way, but this isn't really the case. The truth is that nearly every organization has to rely on at least one critical vendor, and what's most important is to understand how to manage its risk. On this slide, you'll see 3 example questions that can be used to determine whether a vendor is critical. If you answer yes to one or all 3, that's a good indication that the vendor should be considered critical. For example, a cleaning service provider that goes out of business or fails to show up and clean your building one day might be inconvenient, but it's probably not going to have a significant impact on your operations or members. This type of vendor can usually be replaced pretty quickly, and even if it couldn't, your operations or members wouldn't be negatively affected. On the other hand, a vendor that provides electronic payment processing for your members would likely have a much bigger impact if its services were suddenly unavailable or if it needed more than 24 hours to recover after a disruption. Inherent risk is a little more complex than criticality and is usually measured on a scale of low, moderate, and high. This depends on a variety of factors, such as the vendor's access to data or whether it interacts directly with your members. A debt collections vendor that directly communicates with your members would likely be considered high risk because this vendor is essentially representing your credit union and acting on your behalf. Inherent risk can also relate to the vendor's financial health or its reputation from lawsuits or negative employee reviews. One of the most important things to remember about inherent risk is that it doesn't change throughout the vendor engagement. So if you determine that a vendor is inherently high risk, it should always be treated as a high-risk vendor. It's common for a single vendor to expose you to multiple risk types, so you'll want to keep that in mind as you begin your document collection. For example, you might have a vendor that sends out marketing emails to your members. This vendor would expose you to at least compliance and reputation risk, since marketing is one of those highly regulated activities to ensure that organizations are not misleading consumers. And I just want to point out that high risk and critical do not mean the same thing. It's very possible to have a non-critical yet high-risk vendor. One good example would be a vendor that provides shredding services. They would be considered high risk if they have access to confidential member information, but non-critical because you can still operate without this vendor's services. In just a bit, we'll show you some examples of what to collect for each risk level, but remember that this should only be used as a reference point. Your credit union has to determine for itself what types of documents to collect from each vendor, which may be slightly different from the ones we've listed. So the actual due diligence process begins with putting in your requests and collecting documents from your vendor. This can sometimes be challenging for a lot of people because it involves collaborating with your vendors who may not always understand what you're asking for. Some of them might just take a long time to respond because they're not really sure where to find certain information, or they can be unwilling to provide certain documents. Fortunately, there's several strategies and tips you can use that will create a more consistent and straightforward process. These can help you avoid delays and collect the documents you need quickly so you can move forward with the review process and take those next steps. If this is during initial due diligence, that might be selecting a vendor and signing a contract. And if this is ongoing due diligence, those next steps might be making plans to renew the contract, or even ending the vendor relationship. First, you'll want to work with your legal team to make sure that your vendor contract includes some language around due diligence. It's important to include things like a right to audit clause and other sections that clearly state you have a right to periodically collect due diligence documents. Also, make sure to be specific about the timing for when you expect your vendor to provide documents after you request them. You don't want to be unclear about these details because you might run into a situation where you need to review a document right away, but the vendor isn't obligated to respond immediately and doesn't reply until months later. For example, if something were to happen like a data breach, you would want to make sure that the vendor fixes the vulnerability shortly after the incident was discovered. You would need to review the vendor's cybersecurity documents, such as their vulnerability testing results, to ensure that they resolve the issue quickly and their control environment is effective. Unless you had those details about timing in the contract, that vendor might not give you those testing results until a few months after the breach, when they might not even be accurate anymore. These requirements will, of course, be a little easier to do with your prospective vendors because you haven't yet signed the contract and can still negotiate these terms. If the vendor doesn't agree to your requirements, you can always move on to a different one during the selection process. And you should still consider how you can include this language in your existing vendor contracts, which probably means renegotiating before or during the renewal period. When you have these contractual obligations, you should have an easier time getting the documents you need whenever you ask. This next strategy is one that will save you a lot of time by creating a list of standard documentation, which helps you and your vendors know exactly what you're asking for. Basically, this is referring to a list of minimum required documents for each risk domain and product or service. So by risk domain, this would mean that you're collecting vendor documents related to specific areas like compliance, information security, or financials. And remember that some vendors may contain more than one risk type, so a single vendor might have a longer list of standard documents. The product or service type refers to whatever the vendor is contracted to provide. So if this is a debt collection vendor or an accounts payable vendor, that would determine the types of document you need to collect. One good tip is to identify any documents that are relevant to more than one risk domain. Something like a SOC report or ISO certification might need to be reviewed by different types of subject matter experts in finance or information security. These next two slides will show these examples in more detail. So this first example shows the document standards by risk domain. Let's say you're focusing on assessing a vendor's compliance. You might give them the following list, which outlines the document type and the maximum age of the document that you're willing to accept. Some vendors might be updating their policies every year or every few years, so you'll need to decide how old those documents can be before you review them. There's also a column for any expiring documentation, which often applies to certain licenses or SOC reports. The last column shows some alternatives that the vendor can provide. This is really helpful information if the vendor has a policy that's older than your requirement, or if one of their documents is expired. And some vendors might not want to provide the exact document you're asking for. So it helps to offer an alternative like a summary report instead of the exam results. All of these required documents and alternatives should be decided on by your credit union. Giving this type of list to your vendors can help expedite the due diligence process because your vendor will know exactly what you're asking for and can provide any alternative documents if they don't have access to something. A lot of the time, if you're asking for a very general list of documents, you'll get a lot of follow-up questions from your vendors about what is and isn't acceptable. They might ask you about what else they can provide if they don't have a certain document, or whether they can submit something even though it's a few years old or about to expire. When you answer all of those questions up front, the vendor won't need to continuously reach out. Anytime you can make the process a little easier for your vendor, they should be more willing and quicker to respond. This next example shows the standards for a specific product or service, in this case, a collections vendor. These documents would be reviewed in addition to the previous compliance documents because the collections industry is highly regulated. You would need to make sure that a vendor like this is compliant with laws and regulations associated with their specific industry. For a collections vendor, this would typically include 2 years of complaint logs and employee training documentation related to various privacy laws and standards like unfair, deceptive, or abusive acts or practices from the CFPB. And in addition to evidence of employee training, you'd want to review the vendor's internal policies on those same standards. Similar to the previous slide, you'll see the same categories such as document type and maximum age of the document. There's also a column for expiring documents and any acceptable alternatives if their policies are past a certain age. And remember that any sort of list you create should be considered minimum standards, not a comprehensive list of documents. Depending on what the vendor will be providing, there might be more information that you'll want to review. Now let's focus a little more on the strategy of risk-based due diligence. As a reminder, this means identifying your vendor's inherent risk and criticality before deciding which documents to collect. Using this type of strategy offers a few important benefits that save time and effort. First, it helps avoid a situation where you're asking a low-risk vendor for a document that's completely irrelevant to their product or service. You wouldn't want to ask a cleaning service provider to submit something like a data destruction policy because they aren't going to have access to your data and might not even have this type of document to begin with. This also gives you a more consistent process of knowing which documents to collect from any type of vendor. In other words, you would have a standard list of documents to collect from every low-risk vendor, whether they provide landscaping services or office supplies. These next 3 slides will outline some examples of what you should consider collecting from low, moderate, and high-risk vendors. In general, you'll want to create a list of baseline documents to collect from every vendor, regardless of risk level, criticality, or the type of risk that they pose to your credit union. This will usually include information that every valid business should have, things like basic contact information with their full legal name, website, and address. Some other good information to have is their business license, articles of incorporation, and tax ID. You might also want to consider doing an online search for any negative news on your vendors that could affect your reputation. Sites like the Better Business Bureau or CFPB Consumer Complaint Database can help reveal the status of a vendor's reputation. It's also a good idea to ask your vendors to provide a list of subcontractors or fourth parties so you know what products or services they're outsourcing. Even though you don't have a direct contract with these fourth parties, it's still good to be aware of who your vendors are dependent on. Your vendors like an office supply provider or a landscaper would probably fall into this low-risk category, but you'll still want to collect some of this baseline information to keep on file. And as the level of risk increases, so will the number of documents you should collect. The next level would be moderate risk, which can be a little trickier to define for a lot of organizations. Unfortunately, there's not really a clear standard I can provide on how to define a moderate risk vendor because that's going to be different for every credit union. What's most important is that your organization creates a standard for itself on how you define a moderate risk vendor. This might depend on whether it has physical access to your facility or whether the product or service is a significant expense. For vendors that you classify as moderate risk, you would want to collect all of your baseline documents, plus other information like 3 years of audited financial documents, relevant insurance certificates, current stock reports, information security policies, and policies on how they retain and destroy data. You might also want to review their background check policy and maybe even their hiring practices. Your high-risk and critical vendors will require the most extensive due diligence because they have the greatest impact on your members and credit union. Like I mentioned before, high risk and critical do not mean the same thing, but they should both factor into this last category of document collection. If a vendor is high risk but non-critical, you would still want to collect the highest level of due diligence documents. So similar to the previous level, you would want to build onto that list of baseline and moderate risk documents that you collected. Since your high risk and critical vendors have access to data it might be essential for your operations, it's important to collect relevant documents such as business continuity and disaster recovery plans. This would ensure that they can continue servicing your credit union during an unexpected event. An incident management policy would also be important to review so you're aware of how they detect, resolve, and communicate any security events that occur. Penetration and vulnerability testing results would also be good to review, along with data flow diagrams and any records that show outages and violations of service level agreements. And if possible, you may want to consider an on-site visit, which can reveal a lot more information about their daily operations and procedures. These last three tips are helpful to keep in mind throughout the entire process. Collecting due diligence documents can sometimes turn into a lot of back and forth with your vendor, so you'll want to consider these tips to avoid that situation and save some time. Always try to make your requests as clear and concise as possible, with specific due dates or timeframes and contact information so your vendor knows who to reach out to for questions. Those previous lists of standard documents that I reviewed are really helpful in keeping your requests concise. It also helps if you explain to the vendor that any delays or missing information on their part can potentially prevent you from moving forward with the engagement. You might let them know that you can't sign the contract or won't renew it until you receive all of their information and complete the due diligence process. If this is a vendor who's eager to obtain or keep your business, this should encourage them to respond quickly and provide complete information. Once you start receiving those documents, it's best to get them reviewed as soon as possible rather than waiting for a complete set of information. Vendors will often provide some of those basic documents immediately, but other information like stock reports or audited financials can take a little longer for them to prepare. If your credit union needs this product or service right away, you don't want to create any sort of roadblock that prevents you from moving forward with vendor selection and contracting. And keep in mind that risk domains are usually managed by multiple subject matter experts, so it's unlikely that you're going to be giving every document to a single person or team. Documents will generally need to be distributed to different teams, so you should really start the process early. And even though you might be thorough in your document collection, your subject matter experts might need to request additional information from the vendor, or they might have some follow-up questions. So it's important to get started on the review process right away. And finally, this last tip is just a reminder to continue to follow up with everyone involved. If you're limited on time, like most people, you'll just need to keep communicating to make sure that everything is on track and you're aware of any delays. You should always be able to see the status of different tasks, like whether a document has already been collected and if it's currently in the review process. Tracking the status can also help you identify anything that seems to be taking longer than usual. If a vendor is taking a really long time just to submit some basic information like their tax ID, that might raise a red flag. Calendar reminders can be a good way to keep everyone on schedule, and it's best to follow up early and often before your requested due date. If you wait to follow up on a task until the day it's due or a day after, you might find out that the document won't be submitted until well after your expectation, which can cause further delays in selecting a vendor and signing the contract. In addition to knowing which documents to collect and some of those time-saving tips, it's also important to determine the frequency of your document collection. I mentioned before that due diligence should be an ongoing activity for your existing vendors, so I'll explain more about how often this should be done. It really goes back to the strategy of using a risk-based approach. So a vendor's criticality and risk rating should determine how often you collect and review due diligence documents. In this example, you'll see some due diligence items along with their suggested frequencies based on criticality and risk rating. For your critical or high-risk vendors, you generally want to perform due diligence at least on an annual basis. This would include doing a formal review on things like their financials, compliance documents, and cybersecurity practices. Moderate risk vendors can probably go 18 to 24 months between due diligence reviews, depending on the product or service. And low risk vendors can undergo due diligence every 3 years or whenever the contract is set to renew. Keep in mind that you may need to perform due diligence outside of these frequencies if there are vendor issues like declining performance or some type of business disrupting event. For example, maybe you just finished your annual due diligence of a critical vendor and their facility is shut down the following month because of a natural disaster. Even though you might have just reviewed their disaster recovery plan, you would still want to review it again shortly after an event just to make sure it's still effective. And I just want to emphasize again the importance of risk-based due diligence because it really cuts down on your overall workload and ensures you're not wasting time on collecting irrelevant information or focusing too much attention on your low-risk vendors. When you understand the risk level and criticality of your vendors, you can create a repeatable process that states which documents to collect and how often. And with that, we have our next poll question.
Our second poll question of the day is, how often do you perform due diligence on your critical and high-risk vendors? Annually, more than once per year, every other year, during contract renewal, or not sure? Christine, I have another question here that we could go ahead and answer. And that question is, are there any vendors that can be exempt from the due diligence process?
So in general, all of your third-party vendors should be going through the due diligence process. And I know this seems like a ton of work, but remember that you shouldn't be requesting the same amount of information from each vendor. Your document request should really be tailored to each vendor's risk level and criticality. So your low risk and non-critical vendors will probably just be submitting some of those baseline documents. I would say that the only vendors that can truly be exempt from the due diligence process are public utilities like water or electricity, because they're usually the only choice you have in a provider. I hope that answers your question.
Great, thanks, Christine. Just a reminder, if you have any issues submitting your poll answers, you can submit a message using the Ask Question widget, and we can assist with that. We have about 30 seconds left on this open poll question, so please get those responses in quickly. And we're down to about 15 seconds before our poll closes out. Thank you. Okay, here are those results. Thanks again, everyone, for taking the time to answer the poll. I would like to quickly direct your attention to the related content widget, where you will find our 7 steps of risk-based vendor due diligence infographic and matrix. This handy resource provides you an infographic and a downloadable matrix. Okay, Christine, let's continue with the presentation.
Great. Hopefully that question gave you some insight into whether your current due diligence frequency needs to be adjusted. And now that we've covered some examples of what to collect and how often, it's important to know what to do with all of those documents. As I mentioned before, you'll want to start the review process as soon as you get your vendor's documents, even if it's only 1 or 2 at a time. The 2 main steps to take are organizing your documents and then collaborating with other individuals like subject matter experts and stakeholders. Once you get each document, make sure it's current and valid by checking the expiration date if necessary. Then you can begin organizing the documents in a single repository with a process that manages version control. This makes sure that they're easily accessible for the subject matter experts who will be reviewing them. And just a reminder about subject matter experts, it's extremely important that they be qualified in whichever risk domain they're reviewing. For example, a licensed CPA would be a good choice to review a vendor's financial statements. You'll probably need to collaborate with a variety of internal or external subject matter experts, which is why it's important to start the review process early. Once your documents are organized, you can reach out to the appropriate subject matter experts and let them know that they can begin their review. Some reviews might take a little longer depending on the type of document and the potential need for follow-up information. So just make sure everyone is on the same page when it comes to the timing and review schedule. It's also important to communicate with your stakeholders like senior management or the board and let them know of any delays or other issues, especially with critical or high-risk vendors. For example, if a critical vendor suffered a breach and isn't responding to a due diligence request, that should be elevated so your stakeholders can make a decision on next steps. Creating a standard reporting process can help ensure that stakeholders are kept informed throughout the entire process. And as I mentioned before, due diligence may need to take place in between those regular review schedules, especially in the following situations. First, you should always perform due diligence before the contract is set to renew, whether that's every year or every couple of years. This gives you an opportunity to renegotiate the contract and make any necessary changes. Due diligence should also be performed if you discover any performance issues during your ongoing monitoring activities. Depending on how significant the issue is, you may even need to request new documentation or evidence for risks that you didn't previously review. In some cases, this due diligence review can help you decide that it's time to end the vendor relationship. It's also important to review due diligence whenever there's a new or updated regulation. Since your vendor's compliance is ultimately your responsibility, you want to make sure that you review the most current documents and verify that there aren't any compliance issues that you need to address. In this last section, we're going to cover some common challenges you might face during the due diligence collection process and how to work around them so you can still review the correct information. This is especially important when your list of potential vendors is on the smaller side. If you're searching for a vendor that offers a specialized product or service and it's necessary for your operations, you might only have a couple of options. In that case, you might need to be a little more flexible with your due diligence requests while still making sure that you're reviewing the appropriate information. However, if you have a lot of options that you can choose from, especially if they're low risk, you might just decide that it's better to move on to another vendor who's more responsive and willing to provide the information you need. Working with vendors during this process is never going to be perfect, so it helps to think through some of these potential problems and consider how you can respond. One of the most obvious problems you might come across during the collection process is a vendor who won't provide certain documents. In this situation, it's important to understand the vendor's reason so you can suggest an alternative if possible. For example, maybe the vendor simply has a concern over sharing security processes with your credit union. This would be an understandable concern, so you could try suggesting a virtual or in-person meeting where you and the vendor can review the document in real time rather than keeping it in your possession. However, it should raise a red flag if the vendor refuses to provide information without a valid reason and doesn't want to offer an alternative. This could indicate a larger issue and should make you think twice about partnering with this vendor. If the vendor is refusing to comply with these due diligence requests, just consider the potential difficulties of trying to resolve issues after you've signed the contract. Always make sure to document the situation so you have evidence of your request and the vendor's reasoning for not providing the information. And if necessary, you should be seeking approval from senior management for any document exceptions. One challenge you might see often with private vendors is the inability to collect their financial documents. Unlike public companies, private vendors are not legally required to share their financial documents, so you might have to be a little creative when asking for this information. Again, you'll want to suggest some alternatives that the vendor might be willing to provide, whether it's a different type of document like an accountant statement or another method of reviewing their financial health, like scheduling a call between your subject matter expert and the vendor's CFO. You really don't want to skip over this financial information because this area provides a lot of insight into the vendor's stability. A vendor's financial health can help determine whether they can continue providing products and services to your credit union. An extreme example would be a critical vendor losing so much revenue or making really poor investments that it eventually goes out of business, which would obviously have a significant impact on your operations. Another common challenge relates to larger vendors like Google or Microsoft that most of us are using every day. Some of these larger companies probably aren't going to respond to individual requests, but that shouldn't stop you from trying and documenting your attempt. Auditors and examiners will expect to see at least some effort in obtaining due diligence documents from these large vendors. So do an online search and document whatever information you can find. You might even be able to find some information through a customer portal, so ask your sales rep or account manager if something like that exists. And this brings us to our last poll question.
Our next poll question is, what is the most common challenge you face during the due diligence collection process? Vendors' unwillingness to provide documents, spending too much time on requests, not knowing which documents to request, or you're not sure? Christine, let's go ahead and answer another question from the audience. And this question is due diligence necessary for a vendor we're only going to use one time?
This is another great question that a lot of people have because it probably seems like unnecessary for some of those one-and-done vendors. But yes, even if you plan to use a vendor a single time, there's still a level of risk involved that needs to be identified and managed. And even if this is a low-risk vendor, you'll want to make sure to do some research on their reputation and collect their basic information and any other appropriate documents you might need, like a business license and insurance certificate. I hope that helps.
Thank you, Christine. Just a reminder, if you wish to receive the CPE credit for today's session, you must answer all poll questions and be in attendance for the entire live session. You will then be sent a follow-up survey link that will need to be completed after the webinar concludes. If you have any questions, please feel free to put those in the Ask Question widget, and we will try to answer your question live. And if not, we will follow up with you via email. We're down to about 15 seconds on this open poll question, so please get those responses in quickly. Thank you so much. Here are those results. Thank you, everyone, for answering this question. It's always interesting to see what everyone says. I'd like to mention that you will find our How to Do Vendor Due Diligence Reviews, the complete breakdown ebook, in the related content widget. This ebook breaks down how to do a due diligence review on your vendor. Christine, I'll pass it back to you.
So whatever challenges you have during the document collection process, I hope that the topics we've covered today can help. And as we wrap up, I know I covered a lot of information, but here are just a few key takeaways that are worth mentioning again. Remember that due diligence is an essential activity that needs to be done both before and during the vendor relationship. It should always be done prior to vendor selection and signing or renewing the contract. Performance issues or regulatory updates should also initiate a due diligence review. And although due diligence can be a lot of work, it provides many benefits for your credit union and its members, such as protecting your resources and keeping data safe from cybersecurity incidents. I also explained the concept of risk-based due diligence. This refers to the process of identifying a vendor's inherent risk and criticality and using that information to determine what types of documents you should collect and how often you should review them. And finally, consider some of those challenges you might face when collecting information and have a plan in place so you'll have some ideas of what to do ahead of time.
Great, thank you so much, Christine. Before we dive into more questions and answers, I would like to thank everyone for attending. I would also like to thank Christine for her time in sharing important information. On your screen now, you will see our upcoming webinars. On August 22nd, our Vendor Contract Management for Beginners webinar. And on August 24th, our Performing a Complete Vendor Contract Review webinar. We hope you will be able to join us for those sessions. A link to register for those is in your copy of today's presentation slides. Let's now go ahead and answer some more questions that have come in during today's session. Okay, Christine, the next question is, does the NCUA require a standard list of due diligence documents that a credit union should collect from its vendors?
So unfortunately, the NCUA does not provide a specific list of documents to collect. And they even state that certain vendors won't require as much as much analysis and documentation if their risk profile isn't as complex. So it's really important to just review the guidance that I mentioned earlier and create your own list of documentation that addresses the NCUA's expectations. So for example, one of the letters states that a credit union should develop an understanding of a third party's financial health, and it gives a broad suggestion of reviewing audited and segmented financial statements. While financial statements can refer to a wide range of documents like balance sheets, income statements, or cash flow statements, so it's really up to your credit union and subject matter experts to decide on what to collect. So hope that helps.
Great. Our next question is, do we need to collect due diligence on our vendors' subcontractors?
So this is a good question. It's generally not going to be easy to collect due diligence on your vendor subcontractors, which are also known as your fourth parties. Because you don't have a contract with your fourth parties, they aren't obligated to share information with you. But that doesn't mean that they're exempt from your due diligence process because they can still expose you to risk. So it's a good idea to review your vendor's third-party risk management policy to get a better understanding of how they manage their own vendors. You can also request a list of vendors that your vendor has classified as critical or high risk, as well as copies of their most recent annual reviews. And you can sometimes even collect a copy of the fourth party's stock report through your vendor, but you'll probably need to sign the fourth party's confidentiality agreement. So that helps.
Great, thank you. Next question. Why do we need to consider both criticality and inherent risk for due diligence and not just one or the other?
So remember that criticality and inherent risk are two separate concepts, and it's important to understand both so you know what types of information you need to review and the frequency of your due diligence. If you only considered inherent risk, you would be overlooking the vendor's impact if it were to suddenly fail or go out of business. And if you're only focusing on whether this vendor has a significant impact on your credit union, you wouldn't be fully addressing the other specific risks that can harm your organization, like, their financial health or cybersecurity practices. So thank you for that question.
Perfect. Next question. Should I always request the same documents after the first due diligence review?
This will generally depend on whether you've discovered any new risks or changes in the vendor's performance in between those regular due diligence reviews. At a minimum, you should make sure that all of those documents you collected during the initial due diligence review are current. And when it's time to do your ongoing due diligence, you might need to collect additional information.
Great. Next question. Is it ever recommended to perform due diligence more often than once a year, like quarterly?
This is another great question. So doing due diligence reviews more frequently might seem like a good idea, but you also don't want to be using more resources than necessary and taking time away from other important tasks. So going back to the concept of risk-based due diligence, the whole point is to create more efficiencies and only review the most relevant information. So if you're doing due diligence reviews multiple times a year without a valid reason, that's probably just going to cause you to rush through some of your other processes. So hope that helps.
Great. Next question. What are some tips for reviewing a document virtually?
So to review a document virtually, you'd want to start off by asking your vendor in advance whether the document has any redactions and if they can summarize the redacted content. You should also make sure that you're scheduling enough time to review and understand how the document will be presented, whether it's a physical document that will show on the screen or a PDF or a Word document. You'll also want to confirm that you'll be reviewing the most current version and ask whether you can screenshot if necessary. And just make sure you know how you can document the vendor's answers to any questions, whether that's in writing or verbally. So I hope that clears it up.
Great. I think we have time for a couple more. What type of policy or report should we ask for if we want to find out about the vendor's hiring and training practices?
That information can usually be found in things like general HR policies or background checks and compliance training policies. Just make sure that when you're requesting that information that you're specific about what you're looking for and provide a few examples so the vendor knows what you'll accept.
Great. And our next question is, what if our vendor can't provide all the minimum documents yet, but we need this vendor service right away?
So if the vendor can't provide something, you'll want to look for an alternative way to validate their risk controls. You could also include a contract amendment that would require the vendor to provide the information by a specific date. And whatever you choose, you'll need to document this exception to your due diligence requirement and just provide the reasoning for moving forward with a vendor because that information might be useful during an audit. Thank you.
Great. Thanks, Christine. Unfortunately, that is all the time we have left for questions today. Thank you, Christine, for taking the time to address some of those that came in. Any questions we did not have time to answer today, we will address offline. We'd like to thank you all for attending and hope you found today's session valuable. A big thank you to Christine for her time and content. You can ask even more questions inside of our third-party think tank, an online community that is dedicated to third-party risk professionals and free to join. Just because today's session has ended doesn't mean the conversations and questions must. Post your questions at thirdpartythinktank.com and see what your peers have to say. In the community, you'll find thousands of free educational resources related to third-party risk management topics to assist you. If you'd like to become a member of Third Party Think Tank, you can register on the site or shoot us an email and we'll get you registered and send you a link to set your password. We did record today's session, and that recording link will be provided to you in a follow-up email that you will receive tomorrow afternoon. Also in that follow-up email will be the survey link for you to request the CPE credit. On behalf of VinMinder, it has been a pleasure. Thank you and have a great rest of your day.